Good evening. This is the Elliott wave update for the NASDAQ 100 for Wednesday, May 11th, 2022. We continue to drop here in the NASDAQ again after starting the session with a bias definitively towards the buy side. And with, I believe, the intent that somehow the figure, the CPI that was going to come out today, would show great improvement because, gee, they've raised rates twice. In any case, it did not. And the reaction was swift and complete in forming an engulfing bearish bar. And that would be on the hourly. So I'm in my mind thinking, okay, well, we're off to the races and now we're going to go down. We're going to finish this interior third wave. And it is still in progress, but I'm still, as you can see, counting out more subdivisions within these third waves. And if it really is what I'm putting on this chart, which seems to continue to fit, we truly are dropping off a cliff, and it is turning into death by 1,000 cuts. Because it seems that instead of just letting the sellers come in and do what they need to do, there's a rush to buy it back up. As watching and observing and trading during the day, it felt very much so that we would reach like 12,000. And suddenly it's like major, boom, and all the algorithms would jump to buy it. And it would have forced the market up, particularly in the broader market, in the Dow, which is not really the broader market, it's only 30 stocks, but in the Dow. It was constantly being pulled negative and then brought back into a positive territory and then drove into negative until finally it just became overwhelming and the sellers just took over everything, including the 30 Dow stocks. So there was a lot, again, of buy pressure. And a lot of it was in the banks, the big guys, Citicorp, Bank of America, JP Morgan, Goldman Sachs, Morgan Stanley, et cetera, et cetera, et cetera. So that sector did well until they decided to pull the plug on everything. Now, what does that pull the plug do? It just actually continues this third wave, and it's on an intermediate degree. That's what I'm still using on the daily chart. Intermediate third wave, which began here. Now, I got a very interesting question today, and I'm going to update this, and at that same time, I am going to answer a question as best I can about that somebody wrote to me and left as a comment. And I hope they don't mind. I did kind of say I was going to do it. So this subscriber comes in and says, I've been studying Elliott since the beginning of this correction and comparing my count and his count. And what he was making, his question was that I seem to be very certain that this is going to be 5 waves down, but why couldn't it be an ABC into a 2? So we're in the C now. And that I have to say, oh no, it could be. And I have mentioned the dual count, but I'm going to now tell you why I begin with 5 waves down and then I go from there. So up to the intermediate degree, I feel that we've done 5 waves down on minor degree to form that first wave on an intermediate degree. But at the same time, it could be an A wave or it can be a wave 1. I tend to go to the number versus the letter. And this is why, because I'm counting a very large degree correction. And it's just beginning. If this is the high of the supercycle wave 3, then what I am looking for here is very strong and a big decline. So when I first started, you're going to get your confirmation that it's in progress or underway when you get your first 5 down. So I got that pretty early. But then as it's continued to progress and you could fill in the blanks, you realize that on a minor level degree, it ends up doing 5 down, and that forms the first wave of intermediate degree. And again, it's either wave 1 or wave A. As wave 1, it begins to fit that 5 waves down, of course, is going to be larger and more damaging to price than an ABC. So because the alternate view on the intermediate degree is that this is intermediate wave A, intermediate wave B, and indeed, as you said, this is a wave C. It's a C wave. And yes, we could be getting ready to kind of pop off into a wave 2. So yes, very much so, we could be doing that. I don't now, after today, that wave 2 is on. It still could be out there, but we still now need to finish all of this action of 1, 2, 1, 2, 1, 2. There's a lot in there. And what's going to happen, I have to leave it there for right now, but I'll tell you what normally happens is that I get this far and then I will fill in the blanks, like pull this into 1. This will be a 1. So that's where this comes in, where everything starts to come back. And then or 1 here, and this is the 2. And now we're beginning to drop in the 3rd. And it all fits. But again, I have to let the market tell me. And what continues to throw wrenches into it, let me go down to that hourly chart, is that the market is just throwing these buy rallies. It's like boom and boom and boom, only to be totally rejected. So, and on one hand, I feel it's the amount of algorithms, I think, and I'm not negative on the algorithms. It's just, this is kind of what the process could look like, where it seemingly feels like these false breakouts. It seemingly feels like this jump for glory because we've reached a bottom. So I don't know if there needs to be refinements on how you want to push that button to say we're bottoming and get massively long or get a lot of people long. I don't know. But when I'm trading, I'm like, why would they want to buy it so hard? Why are they believing that this is a major low and are, like a stronger bottom, like we're going to go up and start heading towards back to highs? I do not see that. Yes, we are going to get bottoms in here, and they're going to then produce decent rallies. In fact, again, once we finish and we come into a point that I can get under account a larger bounce, it's going to happen and it'll be extremely tradable. But it's not a turn in the market that I think everybody's now feeling, to me, desperate to have when I see how they're coming in. So I need to put that into some kind of perspective, because to be honest with you, I don't know if they're desperate or if they're just trading. And that's it. They're short. They're just going to get out of short and they're going to buy 100 because that's their position going back up. So what could be happening is they're just early, and that's not uncommon within Elliott, but it's the amount of price that it'll cover that previously would not have been considered in the same move. So again, I don't have any reason to change the longer term view that we're in a correction, and that correction is really going to take us back more than likely over the next few years down to the 2009 lows. Right now, my strong feeling is that we are heading for the 2020 lows. And from there, we will put in a solid rally. Now, again, I'm going to go back out to the daily, because here's where the subscriber was, I think, could be coming from. If this turns into an A, B, C on a big level, then what is kind of interesting is that then this would be, it's not going to be as deep, because if this is A, this is B, the C wave is going to project to that same level that I'm looking for in the third. And in the case of the NASDAQ, it's about 9,070, or right around 9,000 is where I'm thinking this intermediate third will land. But if it's going to be a C wave, an intermediate C wave, then that's going to complete the first leg down on a primary degree. It would then be primary degree wave A. So what all of that then lends out is that all the way up the chain, it's going to bring up that ultimate low. It's going to not present us with that much downside. So, I mean, when you're hearing that people are talking about that these indexes could lose 80, between 70 and 80% of their value. Yes, if everything comes and unwinds in that larger version, where we start doing all 5 waves down, all the way up to a cycle level, there's going to be hell to pay. I'll tell you that, because that's what the wave count would be telling us. But I don't know that degree yet. We're still working on the first leg up, first leg down on a primary degree level. So in other words, going back to that chart, these are the degrees I've got to count. Right now, we're putting in the first moves for the intermediate degree, which will complete the first leg of the primary degree. And when it's done, which will complete then the first leg down of the cycle degree. So put that all together, and then you're getting into this larger correction, which is the one that would suggest it could be very damaging. Down here, these are going to just be normal. This takes us down to maybe 2021 lows. And then this level would, the first leg down in this level would take us down to the 2020 lows. And then the first level on here could take us then back down to the 2009 lows. Because as I go through and you talk about where these waves could bottom to produce, the chain, it's usually going to be within the fourth wave of one lesser degree. So, and that's what I do. And when I go out onto these charts and I'm like, okay, under cycle, I got to look for primary. Primary fourth wave is right there at 66.28. So is it not unusual to think that's where the first leg down on the cycle level should come in, and on the primary level coming in there? And then you get a rally, and it should be a very decent rally. A B wave would be expected, if this truly comes in down to that level, a B wave would be expected to do 50 to 62% retracement. And you're likely you could end back up pretty high. And it's going to be very tradable. And everyone will be convinced that the world is rosy and pretty and everything is okay. But it won't be, because we'll still have an additional C wave down. And that C wave is more than likely where the market will crash. So I'm not necessarily looking for a crash here in this first leg. I think we're going to work our way down there, and we'll get there, and then we'll have that massive rally because the world's going to be all rosy, and then boom, we will have a crash afterwards. Now, I know this is turning into a podcast, but I needed to get this in because as we work through this process, I think people need to just maybe start to wrap themselves around what it all means towards this larger degree, what it all means when you look at a weekly chart, what it all means when we start looking at that monthly chart. It's not the end of the world. It's all going to be extremely tradable, every last bit of it. Now, I got to bring it back up because I got to swing back around here. And now we need to talk about what we're doing inside all of this. Here's only the minute 1 and the minute 2. And so this starts to really break down. This 1 is now way out of line. It should be way over here. And here's the 2. And then we break down twice again. So I'm not sure how I'm going to do it, but I'm just going to finish this particular count and the rest will make itself known. And what I mean by that is I always turn to the market to tell me. And now I'm still relying on the market, but I am counting the individual moves and how they fit into each other. Because again, remember building blocks. So if I continue to put the blocks together, I will get the vision. I will be told by what the market is doing, what exactly the count is. So, but my best estimate right now is that we continue to subdivide. And that's basically because what the market feels it needs to do. And where this was a wave two, sure, can do that for sure. False, get way up there, get to that 618 number, which it did. So it's like, okay, now you're there. And then bam. And then try to buy it back up again. So again, I have to be honest with you, even within this, come on, don't do that. Come on. All right. See what this does? Somebody tell me why this does this. And it just drives me literally insane because I'm trying to get it open so we can look inside. This, here we get another 1-2, and I'm running out of how I'm going to label it. So I'm just kind of making this up. And then I get another 1-2. So this is what I'm talking about. Why? Oh, major low, 12,100, major low. Let's buy it up 300 points. Okay, you just got bad news. Yeah, but they were all pre-scheduled. So we still have a lot of money being poured into the market, obviously. And then a lot of money coming out of the market, obviously. So we're getting the waves, we're getting the moves. If I have to continue the count, and this is on the 30-minute chart, this is a 1-2, and this is a 3, but it still needs a 4 and a 5 and a 4, and just so on and so forth. The steps become longer and more arduous because we have to wait through them all. But it should be good trading in terms of you kind of are looking for that bottom, that low. Shows the rest of the market. Now, let's try to fill some of those blanks in so that we can get an idea of how deep we're going to go. Let me go back out. Unfortunately, I got to go quickly to the daily. Right, let's go to this 3. And so first we're going to go there, to there, to there. I don't know if it's exact. I'll try to make the difference. So you see, we're pretty close. We're very close to where minute 3 is equal to 1.618 of minute wave 1. And that's like major because that's the most common. That's the one I want to see. Meet it, complete it. And that just finishes the minute 3. So this, I think I would likely recount because one other, now let's remember that 11,802. And then I'll get rid of this so because it'll overlap. Remove that. And now let's take a look at this. So again, from here down to, I think I put it there. Yeah, I'll put it here because that is the true low. And then up to here. So again, even on this one, same area. So first one was a little bit higher, like up here. And if we break it, then we're likely still going to sit above 11,000. So we've drifted down below. We got down to 11,938. And now we're looking more close to the round number. So we're anywhere in between. And then I think that's done. And then we get a little rally and a back, and then we're done with the 3. And then we get a rally and we're back and we're done with the 3, a rally and back and we're done with the 3. And one more rally and one more decline. And then it's either intermediate wave 3 or it will be C, intermediate wave C. But that's how long we have to wait. It's what comes after this next 5 waves down. Then we're going to be able to determine, okay, is it going to be a 3 wave? And now we're just going to blast. We're really going to go. And that is a possibility. I mean, they can get down there and finish this C wave all the way down. They could do that. If the market's intending to really let out the air and push a lot of people out of the market, it can do it. It can do it in a day and a half. if it really wants to, but we'll see. So again, for tomorrow, I actually do foresee that we will have continuation to the downside, but that does not discount at all that the rallies will be strong. And as a day trader, you can find out real quick if you're trading the NASDAQ mini or even the S&P mini, how quickly you can be down several $1,000s. So you have to trade clean. You have to trade with rules. You have to trade along with the market. So you're watching price action. You're watching how the interactions are between the price action and the moving averages. The moving averages are very, very solidly down right now. Very much so. That started it. Whether that rally, sure, okay, whatever. But the balance of the day, they are pointing down. And strongly, hourly. I'm going to go up to the daily just to take a peek, but we're getting signals that no, we're not done. See how that 200 is starting to arc more lower, the 50 arcing strongly lower, the 20 pointing fairly strong. And you see the angle. It's pretty steep on the daily. So we're not getting any signals yet other than, well, momentum could be waning to the sell side, or this could just flatline for a while in an oversold condition. And many times, I have to be honest, you get the crash when the market's really oversold. Because everyone who's held on is like, I can't hold on anymore. Damn it, what's going on? And boom, you get that big one-time down day. And that would announce a low in my mind. As a trader, that would announce a low more than what they think is doing it now. All right. So I do think we have additional downside. So we have support. This is fib support now, and that basis, this smaller third. If I had to put that third in, we're looking a little bit higher, I believe. I'm just going to throw it back on there, folks. Let's just take the peek because we have to include it. There to there. Again, well, there is some overlap. 1.236 and 1.618. Beautiful. So, and we have overlap here. So maybe the smaller third has ended. Okay. Because we got down there below 12,000. And now we bounce into 4, which is on this degree. I'm going to get rid of that. But on this degree, a third, and then 4, and then we tune to 5, and then we can come down in here, and that finishes that. And well, if this is the third and that's a 4 and a 5, then we're going to go up to here, and then we get a 4 and a 5, and that takes it all the way up. But we got 11,057. We've got 10,500 to 10,440. We have levels, and ultimately, I believe that intermediate wave 3 gets us down to 9,000. So I can put it right there. Right there, 75, 9,000. We're still pretty far away. All right, I'm going to end it right there because now this is longer than I wanted it to be, and I apologize. But I hope it gives enough information so we can keep this all going. Our next update will be tomorrow, May 12th.